Good day and welcome to another episode of Market Watch. My name is Ranu De Silva.
My name is Pasindu Pereira.
And today we'll be discussing about the market overall, Pasindu. And I've also noticed that there has been the corporate earnings have been published. And Pasindu, how do you see the corporate earnings and what are the sectors that you're looking at these days, Pasindu?
Yeah, Ranu, if you look at the corporate earnings, I haven't seen much of a hiccup. I think overall, so far the earnings are fairly okay. If you look at some of the sectors like I would say the tile industry, most of the players have already released their results, especially Royal Ceramic, Lanka Ceramics and Lanka Voltite. If you look at their revenue numbers, it's fairly okay. It has been growing at a decent rate, right? If you look at Royal Ceramic, we have seen around 12% revenue growth. And if you look at the Lanka Ceramic and Voltite, has seen around nearly 7% earnings growth, which is a fairly okay number for me. And if you look at the margins, I have seen improvement in the GP margins also. That's in a quite significant way, because if you look at Royal Ceramic, we have seen the margins improved from 41 to 43%, right? And Lanka Ceramics 33% to 36%, and Lanka Voltite 33% to 35%. So margins per se, I think they have done fairly well. But when it comes to the net profit, we have seen some sort of a reduction in terms of Lanka Ceramic and Lanka Voltite, but Royal Ceramic has seen an 8% growth in the net profit. But overall, what I can tell you is the earnings is fairly okay in terms of the revenue and the momentum from the industry point of view, because we have seen the volumes have been increasing. Especially in a scenario where the competition has been increased. Through the budget, some concessions were given to the tile importers in terms of the import tariffs. But within that context also, we have seen the revenue numbers has been doing well for the local manufacturers. So I believe that's a good trend. So when it comes to the Royal Ceramic, their major drivers was the sanitary ware sector, which contribute nearly 10% run for the overall revenue, but which has been growing at a 37%, right? At the same time, if you look at the aluminium sector or the aluminium arm, which has been growing at 27%, which contribute nearly 10% again to the revenue. But if you look at the major contributor to the revenue, tile alone has grown only by 6%, but sanitary ware, aluminium, the sectors has been growing. So I think that's a good indication where the domestic construction boom which has been happening right now. So that's the tile sector results, Ranu. So how about the aluminium? Because I have seen the Royal Ceramics aluminium arm has done really well, right? How do you look at the aluminium sector?
Definitely the person, I mean, when you think about it, it's coming to mind as well. The aluminium sector overall has done really well, and you see there are two companies that published, which is Alumex as well as Swisstech Ceylon PLC. I've seen very lovely numbers. I really like the numbers, Pasindu. But I'd like to touch on a more of a macro global level to start with. If you look at the aluminum prices, had a bit of a fluctuation throughout 2016. I think mid 2016 we saw it going up, and the production halted in some areas in China due to the political factors, as well as the commodity prices were going up. But now passing through again, I think towards the end of the year we saw prices coming down, and I expect with the news available that we are expecting the prices to be low again and be on that low levels, about 1,500 levels is what I'll be looking at in terms of metric ton pricing for USD actually. So if I get to the results, very impressive. Alumex PLC has posted a 3.17 billion in revenue, which is a 15% growth for the period, and posted a 1.26 billion for the quarter, which is a 20% increase compared to the previous year corresponding quarter. Top line gross profit margins have been 30% and 28% for the period. However, comparing the quarter, margins have dropped to 30% from 33% Pasindu in the previous in compared to the previous year corresponding quarter. This is likely due to what I also mentioned, Pasindu, about the slight price fluctuations that we saw in the market. This could have affected their margins, but I think I'm very hopeful in terms of going forward that the margins what they've been enjoying can be maintained. And if you look at operating profits are about 651.78 million and 260.82 million for 9 months ended and quarter ended. The operating margins have improved in the 9 months to about 21% from 19%. However, the quarter we've seen a drop again, like the GP margins on the top line. Margins had dropped to about 21% passing through from 23%. Profits for the 9 months ended is posted at 490.9 million, which is a 30% increase. And further, the quarter profits is posted at 190.78 million, a 5% increase over the previous corresponding year. And again, passing to another company on the same in the same industry would be Swisstech. Good favorite, the two companies, I think, especially in the manufacturing as well as the aluminum sector. So if you talk about Swisstech, they continue to, for me, to show impressive numbers on the top lines. The revenue numbers stand at about LKR 2.39 billion for 9 months ended, with a 27% increase in for the period. For the quarter ended with a 25% increase, and they recorded 934.2 million from the previous year's corresponding quarter. That's what the increase we've seen. GP margins have improved to 33% from 28% for 9 months ended. However, margins have shrunk just like Alumex to 33% from 39% during the quarter, if you compare with the corresponding quarter in the previous year. Operating margins have increased 17% from 15% for both periods, but with the top line gross profit margins, we have also seen a decline in the operating margin during the quarter to 18% from 20%. Net profits for 9 months ended stands at 292.9 million, a 26% increase. The quarter, however, records a net profit of 114.17 million, and that is a 12% reduction passing through. And again, if you see, we see a significant finance cost in the company and a significant increase. It's the borrowings have gone up in terms of the balance sheet figures have gone up from 91.5 million to 290 million. As per the balance sheet positioning passing through. And I think with an increasing interest rate regime that we are expecting, you know, looking at the macro outlook, I think this company, we might see some pressures coming in from the finance cost side if they are continue to increase their leverage and that.
But if you look at the overall industry point of view, I think we can see some volume growth can be expected.
Definitely possible. I think also, especially with the construction sector, and I've had to stress on this, it's a domestic construction sector. You know, I don't see the major government fiscal policies already in momentum, but you see for the likes of your apartments, those are pretty much on a bit of a high in terms of the growth. We see those things coming, and I think those are what's actually moving the aluminum industry again as well. So I think, definitely, I'm very hopeful. I think definitely these costs can be managed, but I'm just wondering. I'd like to see the strategy going forward. So next quarter we'll probably see that possible.
If you look at the credit growth, I think it's very interesting because we are talking about the construction sector boom. So if you look at the credit growth, you know, the last year, July, again the central bank uplifted their policy rates, but we expected some kind of a reduction in the credit growth per se. But actually, if you look at the last quarter, I haven't seen sort of a relaxation or rather reduction in the credit growth. If you look at the finance company's credit book or rather lending book, which we have seen a considerable growth, right? Say for an example, the people's leasing, we have seen it around 20% growth in the only the loans and advance and not the leasing book, right? So leasing book has also been growing, but at a slower pace because the loan to value ratio also came into the picture, so that curtailed the leasing businesses. But although we have seen a sort of a reduction or rather pressure in terms of that, we can still see a sort of a increase in the leasing book as well. Say for an example, Valuable Finance has seen a 7% growth in the leasing book, and again the LB Finance has seen a 17% growth in the leasing book. But if you look at their major focus has been shifted to the other loans, right? Say for an example, PLC has seen, as I said, 20% growth in the loans, and again the VFin has seen a 61% growth in the loans, other loans, right? And LB Fin has also seen a 19% growth in the loans. So most of them probably be, I guess, a bit of unsecured, right? So they have taken a sort of a risk and lend. Still, what I want to tell you is credit growth still happening, right? Irrespective of the policy rate increase and all the pressures from the monetary policy point of view. So that's the result from the finance companies per se. So in this context, Ranu, what I notice is still, as I said, still the credit growth has been happening. So how the consumer sector is doing?
Exactly, personally, I'm also noticing, I think what's happening again is the consumer is really had gotten used to a certain consumption pattern. I was very, very enthusiastic about the consumption sector, specifically, during last year and the year before. I thought there was been a good growth, but coming into this year, I'm not so hopeful. I'm not hopeful, but I'm not that enthusiastic as was before. The previous years, because I think with the taxation coming in and the inflationary pressures, I think there has to be a little bit of a reduction, and I think we might see it in the quarters going forward. But however, the results have been really good. If you look at cold stores and Cargills, specifically on that consumption sector, it's really been good numbers coming on. If you look at Ceylon cold stores, they posted revenue of 32.4 billion and 11.27 billion for 9 months ended and quarter ended respectively, with growths of 30% and 29%, I beg your pardon. The retail segment of the business has seen the highest growth positive of 34% and contributed 68% to the revenue of the group, considering the period ended. And gross profit margin stand at 15% for the quarter, 100 basis point reduction. However, the margins have seen a bit of a dip there. However, for the period 9 months ended, stand at 17%, which is actually there's no change from the previous year's corresponding period. So you see the 17 continuing, they're maintaining that margin.
If I add something to that, Rano, if you look at the confectionery business line, and again the beverage business, we have seen the double-digit volume growth, if I'm not mistaken, right? Definitely. And again, their margins also been improved, as you said, right? And again, if you look at the retail sector, I notice, same store basis, their revenue has been improved. And again, the incremental business came from their new outlets, right? Has really benefited to the revenue numbers. At the same time, if you look at the last quarter, I think they have opened another 3 more outlets, and they've taken the total outlet to 61, right? Basically focusing on the Colombo and the suburb, right?
Definitely, Pasandu. And if you look at the confectionery side, I think the company also is quite hopeful that this consumption drive is going, and also they've seen the impulse buy segment really growing. And I think that is there. I think like I mentioned before, we are anyway hitting towards that our per capita GDPs are anyway increasing when organically, even though if there is no external boost. So that will continue to drive this. I think there's a lot more penetration to be happening locally as well. Not for these companies, they can see more reaching outwards onto the more rural areas, etc. Not only the urban side. So yes, definitely we'll see that. Again, I think their strategy is very good in terms of the expansion. They've been, relatively conservative. They are not growing too fast, and also I think the store sizes to all that, they have a very good strategy going. I think we'll see good numbers coming up forward. So I mean that actually shows on the profits for the company has posted about 823.7 million for the quarter, which is a 26% growth, and they've recorded 2.70 billion for the 9 months ended, which is a 43% growth positive. So I'm quite hopeful about the company, and I really like the strategy they are implementing there. But I also go ahead with, go forward with Cargill Ceylon PLC, another company which is within the consumption sector, has recorded a 22 billion and 64 billion for quarter and 9 months ended respectively, and they've seen a growth of 22% each respectively for the two periods passing. So that's a very good number there if you see that. But which is they have a revenue mix of retail, FMCG and restaurants. But in terms of the revenue mix, the largest contribution of course comes on the retail, which is 79%, and they've seen a growth of 23% during the 9 months ended. So again, you can see the consumption, the retail segment actually growing. So it backs with the whole private sector credit growth there. If you look at gross profit margins for the quarter ended and 9 month ended, stands at about 12%, which is a 100 basis point improvement compared to the corresponding two periods. So they are pretty much similar. They've been maintaining the margins there passing through. And finally, profit for the quarter stands at 673.28 million, which is a 38% increase. And for 9 months ended, stands at 2.05 billion, which is 63% increase from the corresponding previous quarter. So yeah, Prasendu, in terms of to round up on the consumption sector, I mean, it's either the results are quite expected as what I did. I was very hopeful about the previous year, 2 years. So this year, my only concern is I like to see whether the consumption drive is going to be able to continue with the inflation numbers that we are predicted to come into play, and then the disposable income slightly falling due to taxation and all other measures taken by the policymaker. But contrary to that, we see private sector also growing. But I feel there will be a slight slowdown. However, it is in this
I also
side.
expect a similar situation, because we are thinking about some increased inflationary pressures coming in, right? So with that, there would be some kind of a pressure onto the consumption as well. But still, consumption has been growing at a relatively lower pace in 2017. That's what we really believe, right? Going back to the moving on to the JKH, also released their results. Very interesting, because we have seen some hiccups if you look at the last 2-3 quarters. But if you look at the last quarter, we have seen some positive growth in terms of the revenue, grew by 12%, and at the end of the day, the profit before tax has grown by 32%. As we said, the consumer food and retail industry, mainly contributed by Ceylon Cold Stores, has been the major driver for their growth. As we said, we discussed about that thing. So we have seen that sector has grown at 19% in terms of the profit, right? So that has been positively contributed to the JKH. And the second largest sector would be the leisure sector, has seen a 12% growth in the profitability, which contribute nearly 21% to the revenue, the overall JKH revenue. Especially if you look at the Colombo City Hotels, has seen the occupancy increase. I think that's a good factor. That sounds something for the last quarter, some improved business activities. Right? At the same time, if you look at the beach resorts also, we have seen an increase in the occupancy. And not only that, if you look at the Maldivian resorts also, we have seen improved occupancies, which is backed by the European tourists. I think that's something really good news for us, for Sri Lanka as well. So if you look at the overall leisure sector, has positively contributed to the JKH profits. And again, the third largest contributor to the revenue is the transportation sector. If you look at the last 2 to 3 years, we have seen a sort of a dip in the both revenue and the profitability numbers in the transportation sector. But if you look at the last quarter, Ranu, we have seen some positive trend, especially from the South Asia Gateway Terminal, the port operator. They have increased their volumes by 19%, whereas the overall port the activity is increased by 11%. So they have done extremely well in terms of that. At the same time, if you look at their bunkering business, which has been in with a huge price competition, right, with other players. For this company also, the bunkering business also, we have seen a huge pressure for the last 2 to 3 years in terms of the margins and the volumes. But if you look at the last quarter, their margins been improved, right? At the same time, their revenue also increased in terms of the volume. So that's a positive story for the bunkering business per se. So if you look at the financial sector of the JKH, predominantly driven by the Nation Trust Bank, right? And the company has revealed that the credit book has grown for the NTB. I think none of the banks been released the results yet, but there's a good indication. The credit has been growing from the banking or the commercial banking point of view also. So our conclusion, the credit growth has still been happening, which is really indicated from these results also. So NTB positively contribute to the JKH, and the Union Assurance also, the insurance play also positively contributed. And again, the property business, right, has also seen a 65% growth in the quarter, especially from the 7th cent, there's in the Gregory's Road, so which has predominantly contributed in terms of the revenue recognition. And again, they have hinted about the Cinnamon Life, their waterfront property, exciting property. All investors are looking at that. So I think they have said from the pre-selling per se, they have been doing well in terms of that Cinnamon Life. So this is the overall picture of the JKH. So Ranu, if you look at the overall earnings so far been released, I believe that they have been fairly okay, right? We saw in the September quarter also around 24% growth in the corporate earnings. So I don't see any hiccup for them to grow at this quarter also. But going forward in 2017, yes, some pressures are coming in terms of the monetary policy, in terms of the inflationary situation. But still, I would say the corporate earnings may grow at a relatively moderate pace. I think from that point of view, Rano, if you look at the overall market, now the currently at 6,100 level, right, which trades at 12 times price to earnings ratio, relatively very attractive compared to the regional peers. But still the sentiment not been created due to the maybe policy inconsistencies and some political uncertainties. That is the reason. But if you look at the fundamentally, I don't see any problem over the market. So I would say this is a good buying time with a relatively longer investment view. What do you think about that, Rano?
Of course, Pasindhu, I really agree with you on that sense. I'm also not too enthusiastic in terms of numbers going fast, but I think there'll be relatively growth. So, and also I agree with you completely that it's a good time to maybe look at the market with a long-term view, long-term horizon return taking in the market.
Because what I want to emphasize is basically the short-term problems that we have been now undergoing, not the long-term fundamental problems, right? So with that only I believe a gradual accumulation of the stocks would be the better strategy right now.
Right, Pasindhu. Yes, thank you very much. On that note, everybody at home, thank you very much for tuning in and have a very good day. Bye-bye.